very much for joining us.
Good morning.
Well, if you can begin by telling us what kind of returns you can promise investors for this InvIT.
So, Lata, we have mentioned our different numbers in our offer document. As for regulatory reasons, we can't speak about exact returns, but they are compelling returns. The total returns will comprise of a cash yield, which is compulsory payable as per SEBI requirements to investors. Okay. And there'll also be a growth coming from capital gains because of the growth assets that are embedded into this product.
Okay, so you can't talk about the returns, but we'll talk about it and you tell us if it's true or not. 7.5% is the cash yield and 11.5 to 12% is the total post-tax yield. Is that something that you're looking at?
So I think we'd have to separate cash yield from the capital gains, but I think yes, on a total return basis, post-tax, one could look at the DRHP, and based on the cash flow available and the drop-down assets, one could possibly arrive at those numbers.
Pratik, good morning. So how many assets do you own right now, and going forward, how many more in portfolio?
So Indigrid will start with owning two assets comprising of 8 transmission lines and 2 substations across 4 states in the country. But what is more interesting is that they'll have rights on another 21 lines and 7 substations, which Indigrid will acquire over a period of 2 to 3 years. And this will result in capital growth for investors.
And you have to mandatorily transfer them to the InvIT?
So Indigrid has a right of first offer as well as a price protection clause embedded in it, which makes it a good, very high probability of these assets coming to Indigrid.
How much is the sponsor owning at this point in time?
The sponsor will, depending on where we end up at the price band, will own roughly 16 to 17% on the post the issue.
The minimum is 15, is it?
Minimum is 15.
Okay. How has the anchor response been?
Anchor response has been good. We'll be announcing the anchors later on today, and you'll be the first to know. Okay.
What is the cash flow situation currently for these 2 assets?
So these 2 assets will earn, as per the RHP, about 440 crores of EBITDA. Okay. And then one has to deduct the interest expense, and one will arrive at a cash available for distribution.
So what as per is SEBI, the approx in
440 crores is as per what timeline?
This year.
Oh, this year.
FY18.
Okay, and over the next 2 years?
About the same.
Okay. What is the interest outgo likely to be then?
So net of interest and net of some amount of principal repayment, I believe that the cash available for distribution comes to somewhere about 280 to 290 crores. Okay. But that will have to be worked out based on different interest rate assumptions.
Actually, of all the infrastructure assets, transmission would be the most steady in the sense. I mean, you don't have a problem of some political party telling you not to pay toll or things like that. That's right. Per se, would therefore returns be lower?
So absolutely, Lata. Transmission is a low-risk asset, and this is globally true. Our assets don't have traffic risk. We have a fixed tariff that is payable for the next 35 years for most of our assets. This makes it one of the only asset classes in the country which not only has a 35-year known cash flow, but also has a perpetual ownership right, which means that there is no transfer clause at the end of these end of 35 years.
Any more assets that you plan to include? I mean, 2 for now, but anything else planned?
Absolutely. So there will be another 8 SPVs on which the Indigrid has a right of first offer. Okay. And these 8 SPVs have 21 lines and 7 substations. Okay. And therefore, this can take the total EBITDA up to 4 times of the current EBITDA.
Okay. 4 times the current EBITDA. But what price will it be acquired at?
So the price will be acquired based on market conditions at the time. Okay. But one must remember that Indigrid has a price protection clause, which means that the seller cannot sell to a third party unless it gets a price that is 110% higher than the price offered by Indigrid.
So will you need any kind of fresh equity or debt for any of these future acquisitions?
So since SEBI requires Indigrid to distribute at least 90% of all cash available to the investors, and hence investors get to keep the cash and decide how they want to spend that cash, this is a unique proposition not available in almost any other instrument in the country. And therefore, coming to your question, yes, future acquisitions will require a debt raise or an equity raise. And depending on the markets at that time, we will pursue one of those 2 options. One must remember that acquisitions will always be EPS accretive, or in our terminology, dividend accretive, distribution accretive.
What will Sterlite Power do with the money? Any idea?
So Sterlite Power has this pipeline of another 8 assets, of which 3 are commissioned, another 5 are under construction. So the first thing is that it will use some of that cash to redeploy as equity into those balanced 5 assets. Beyond this, India offers an unprecedented opportunity in power transmission. India needs anywhere from 40 to 60,000 crores per year investment in power transmission. And for the first time, that entire opportunity is available for private sector participation. In our estimates, India offers the highest opportunity anywhere in the world to invest in power transmission.
40 to 60,000 crores
per year.
Okay.
And
Isn't Power Grid coming with any InvIT?
So that's a great question. We'll have to ask them that one, but it's yeah, look at that. So just closing on that point, as you know, recently the government announced even bigger plans for its renewable energy mission a day or two ago, and the Power for All scheme is also doing quite well. As both these schemes take off, India would require a tremendous amount of investment in transmission. And hence platforms like this would be very good opportunities.
So finally then, before we let you go, what's the upside to the earnings for most of these assets? You spoke about 440 crores for this year, for FY18,
yeah.
But put together, including the additional SPVs that could come through, what upside are we looking at?
So as I mentioned, the EBITDA can grow to 4x of the current EBITDA over the next 3 to 4 years, assuming the assets get dropped down. Of course, the EPS growth cannot be that much because that growth has to be funded by debt and equity. But the EPS growth we are guiding will be pretty healthy over the next few years.
Well, somebody was asking, what do you do with stock market money which you're afraid to invest in? Here is looking like there's a safe instrument. Thank you very much, Pratik Agarwal, for joining us and explaining how the Indigrid InvIT will work.
Thank you.